Hey guys, welcome back to the Trading Edge video, your weekend look around the markets. Before we hop in and take a look at what's on my radar for this week, I want to address something that's been coming up through the emails and the DMs a lot, which is Akil. Why have the markets been so wacky? Well, to make things very simple, this has been a very big week for fundamental news events. And particularly in this situation, what came out this week was something that the market has been waiting for confirmation on. Really, they suspected it for a very long time, months and months and months. We're waiting for confirmation on it and finally got that confirmation in the form of a monetary policy statement, right? And I can tell you what, it's not over yet. You can see here on, this is the kind of the economic calendar for central banks. We had the FOMC on Wednesday for the US. We had the Bank of England followed it up on Thursday. And we have one more important one that's going to be on Monday, Tuesday, depending on where you live, which is going to be the Bank of Japan. Now, Bank of Japan already came out and have been dropping hints for the last few weeks on potentially not any type of change, but change in interest rate, but change in policy going forward. And with the US and the BOJ being pretty much the two safe haven currencies, the dollar and the yen, we've already seen strength in the yen due to weakness in the dollar. We could see even more of that if Bank of Japan comes out with a particular statement. So pay attention to Monday, Tuesday, whenever it is your time. The BOJ is pretty tricky. They tend to release their stuff when everyone else is asleep. So just don't be surprised if you wake up and you see kind of more carnage on the charts. Now, speaking of the charts, let's hop into the euro dollar. This has been one that we've been assessing for a good amount of time now, and we've come into a bunch of decision points. So if you guys remember, for you guys that are with me during the week, if you remember, our first decision point on the dollar, or the euro dollar, came right here. This was our previous structure high. Price had rallied down from this level with the FOMC news. And we said that this is the next location that we expect price to go to. Will price go higher from that level? Will price hold at that level? Well, we don't know. This is why we call it decision points, right? We wait for the market to get to that point. We can be pretty accurate in our prediction that price will go there. What will price do after it goes there? Well, that's when we wait for the market to leave us clues. And price ended up retracing at that level, right? A couple of us were looking for double tops and whatnot. We didn't quite get that. Came pretty close, but didn't quite get that, which is a little bit disappointing. But our projection level for that double top move was right down here. So this is one of those stinky situations where price did exactly what you thought, but you weren't able to get involved from you can be disappointed and upset and all that fun stuff because you quote unquote missed out on money. But in reality, tap yourself on the back. You made a good prediction. You made a good call. You did a good job by not entering a trade that you weren't supposed to be in. That's just the markets, right? Markets stink sometimes. Sometimes markets are great. That's how it is. Our job now is to ask ourselves, what are we going to do next? And well, we're at that next decision point, right? This middle level of structure. And just like we did at the top level, there are going to be two choices, right? Price is either going to hold that level. And if we do hold this level, where do I expect price to go? Right back up and retest those previous highs. That same previous level of resistance in the past should act as a level of resistance in the future and a magnet that pulls price toward it. For you guys in the live room, if you take a look at Thursday's recording, good episode on like the magnetic pulls of structure. If we violate this level, then we're looking at price action pulling us down here. So as we head on to our week, I can't tell you which way price is going to go. It's all going to depend on the decision that gets made at this level. If then syntax, right? If price holds, then I would expect a move back up to our 110 even handle. If price is violated, then I expect a move back down to our 108 even handle. So a lot of this will probably be dictated by what the BOJ says, as I mentioned earlier, but put this on your radar and check it out for the week to come. Next up, speaking of the yen, is going to be the dollar yen here. And we have a nice little flag pattern forming on dollar yen. And this is an interesting one, and I'll explain why in a little bit. But right here on the 4-hour chart, let's be important that we're talking about the 4-hour chart here. What we have is a bearish flag pattern that comes after a break and close below structure. So not only do we have a flag pattern, a bearish flag pattern, which is a sign for bearish continuation. That's what we would expect from this type of classic pattern formation, but it also comes at the violation of a previous level of structure. And if we know our if-then syntax and how we talk about decision points, if price action violates a previous level of structure to the downside, right? We break below and close below, then we would expect price action to move lower. So from a philosophical standpoint on how we read trend and our rules for reading trend, this is pointing to the downside. From a classic pattern perspective, this is also a sign to the downside. And it's always good when you can get a trading opportunity that has two things lining up. So if you're someone that's trading the dollar yen here on the 4 hour, again, Bank of Japan, Monday/Tuesday, be aware, yada, yada, yada. Can't give you enough warnings about that. Probably something you want to stay away from. But you can expect a move to the downside. You can see there's a lot of room to that next level. Now, the funny thing about this, if we go one time frame up to the daily, we have a completely different story, right? Because we don't have that flag pattern, obviously, which we wouldn't necessarily expect on the daily, but we also don't have a break and close below either, right? We have a hold of structure. So on one time frame, we're getting a hold of structure, which gives us one signal. On another time frame, we're getting a break and close below, which gives us another signal. Now, I apologize in advance, but I set this up for a shameless plug. On probably Monday, I'm going to release a video here on YouTube talking about how to handle these situations and how to avoid kind of the confusion that comes with having mixed signals. So again, hate to do it, but I want to keep this video as short as possible. But check out the YouTube channel on Monday, most likely, no promises, for that new video talking about IPDE, talking about differences in perspective, talking about routine. I think it's going to be one that's going to be very helpful for you guys. And I noticed because we brought this up in the live room the other day, and it was a question from an aspiring trader who is struggling with this same problem. And I'll tell you what, if one trader is struggling with this problem, typically multiple traders are struggling with it as well. So make sure you pay attention to this space and watch for that video early next week, most likely Monday. Next up, we're going to hit up some indices. We're going to take a look at the Australian S&P here, and you can see price action is coming up or has come up to a previous level of structure resistance, another decision point, which I guess is the theme of this video, and we have held. We started retracing off of this. We go down to the 4 hour time frame, we get a clear view of this. Now, what I'm looking for here is this, a potential retest of previous structure highs, and this would give us what's called a double top. So price action has come to, we've been in a massive bullish trend, obviously. We've come to a level of structure. We've dealt with some exhaustion. You can see the RSI, the relative strength index, was massively overbought. Let's see if the bulls try to make one more run at creating new highs. If they try to make that run, they rally up. And if they once again lose at the same level, that will give us a classic charting pattern called a double top, which is a pretty much a reversal pattern that gives us more confirmation than your typical like V reversal. So this would be an awesome opportunity to get involved and look to ride this thing right back down to this level right here. You can see the consolidation block before our big extension up, or our big breakout to the upside. So that could be something to look for here on the Australian S&P. Again, look for a potential double top, give you a nice price point to get involved with, and a look to get short. But make sure this structure level holds. If it breaks and is violated, then we're in trend continuation mode, which is a whole different tactic. Next, we're heading over to the FTSE. FTSE's been in consolidation. I shared with you guys a video a couple weeks ago where we talked about 6 pattern formations that have formed within this consolidation zone. I don't know if I showed you the last one. Probably not, because I think that video was a while back. But the last one was a bearish bat pattern that formed like this: X to A to B, B to C, C to D. So real quick for you guys out there that, you hear about harmonic patterns or advanced pattern formations, your Gartleys, your bats, your butterflies, and you assume that they're just for Forex. That is not true at all. Again, I wish I knew the video for you, but for you guys that are familiar with these pattern formations, you can look in this zone pretty much from the beginning of 2023 to present time, and there's about 6 pattern formations in here. I believe all of which, except for maybe one, were winners, and this was the latest one. So the FTSE has come off this decompletion and we've ran or are running right back down into our profit level, right? If I take my Fibonacci retracement from swing low to swing high, typically what we're looking for when it comes to advanced pattern formations is that 382 Fibonacci retracement. You can see that level comes at a very nice structural level as well. We have a structure swap situation going on here where we have price getting rejected and this being the final base point before that breakout. Look left, we have a test up here, we have a test up here, 2 levels of inside structure. Look left, we have another level of inside structure right there. So price has proven to respect this level in the past. We would anticipate that it's going to respect it in the future. Again, we don't know for sure, but we're just playing the numbers game and probabilities, right? We would anticipate that it's going to respect it in the future. Now, why am I bringing this up? Am I saying to trade the bat pattern? No. Way too late for that. The move has technically not already been made, but you're pretty far off the completion points. You're getting in at a very expensive price if you were to buy it or sell it right now. But if we go down to our lower time frame, right, we take a look at this same level, we have another advanced pattern formation forming, right? See this little structure shelf I showed you on the daily? Well, if we take a look at that as being our X to A, our swing low to swing high, if I can actually take my Fibonacci and grab it on, swing low to swing high, you're gonna see we have an X to A that looks like this. We can see that this first retracement comes down to our 618 retracement, putting us on alert for a Gartley pattern. I'll draw the fib in real quick. I don't want to get it too crowded, but just so I have this measured out correctly. And we're looking at an advanced pattern formation that looks like this: X to A to B, B to C, and C to D right here at our 127, with that zone reaching all the way down to our X leg as being the decompletion point for a bullish bat pattern, or excuse me, bullish Gartley pattern. Sorry, it's late night, just came from playing soccer with the kids for about 3 hours. Oh my gosh, their energy never gets depleted. Only mine does, but it'll be worth it when they go pro and they can take me to all these cool places. I can watch soccer for a living while trading during the week. Anyway, so this is a bullish Gartley pattern. So this is a buy at market. If you're an aggressive trader, if you're more conservative, you're looking for reasons for entry within this zone, but a nice bullish opportunity here on the FTSE at a pretty decent level that we were paying attention to before as well. And like I said before, patterns have been rolling on this index, and as long as we're in consolidation, I don't expect that to change. Speaking of change, if you got into this time of the year and maybe the results aren't what you expected, or maybe you feel stuck or like you're spinning on the hamster wheel, this is the perfect time to make a change. And trust me, it's not going to happen by taking the same actions. You have to take different actions if you want to take different results. So you got to choose what that is, because it starts with you. You can make sure to subscribe to the channel if you're not already, and make these videos a kind of a daily routine or a part of your daily routine. You can check out the Trading Coach podcast and start binge listening to episodes and start acquiring knowledge that way. You can hop on the platform and take the 14-day risk-free trial membership and watch some courses over the break, right? You got to do something. If you are serious about trading, you want this to be a major part of your life, the time is now. You can't sit back and do the same things that you were doing, because you're gonna get the same result, yet time is gonna keep ticking. So I don't mean that as a scare tactic or anything like that, but from someone who believes in the power of urgency and using it as motivation, I just wanna pass that message forward to you guys as well. So I'll see you guys with the video on Monday. Pay attention to the space, like, subscribe before you leave, and until next time, plan your trade, trade your plan. Take care.